All right, in today's video, I'm going to take a look at the dollar, what I think is going on here, how it's impacting the metals. Once again, I have the SMT Premium newsletter is open to anyone that wants to subscribe, as long as gold is moving down into an intermediate cycle low. Once that intermediate cycle low is completed and we've rallied enough to where I don't think it's appropriate for people to be, well, it's too late to be jumping in. Then I will close the SMT. I won't allow people to subscribe, and when their emotions are giving them the all clear at the top of a rally, and then they get caught in a correction. So from now on, I'm only going to let people subscribe at bottoms. I want to try and get people to buy at bottoms and sell at tops, not the opposite. And the opposite is what most people do. So I'll put the link to the premium website in the description below. You've still got time to get subscribed to the SMT. Try and get you in at the bottom of the correction, so you can make money on a rally instead of buying at the top of a rally. So here's what I think is going on. It looks to me like the dollar is caught in a sideways box. At the moment, the dollar is dropping down into a daily cycle low. That is what is powering the B wave bounce in gold. And I'll go to the gold chart here in just a second. We're getting fairly mature in this drop into the daily cycle low. You can see that RSI is potentially getting oversold. And I think most of you know the rule. In the advancing phase of an intermediate cycle, which I still think the dollar probably is still in the advancing phase, then price doesn't tend to get very oversold, and it doesn't tend to embed in the oversold condition. When those parameters change and a market gets either severely oversold, like this kind of look here, or it starts to embed in the oversold condition, as it did here, where it wasn't able to bounce and get overbought, that tends to, or that is a characteristic of a market that's in the declining phase of its intermediate cycle. And that, I don't think we're in that phase anymore. You can see as we rallied out of this bottom, momentum got embedded in the overbought condition, indicating that we're in the advancing phase. And I suspect, since this daily cycle is pretty mature, I think we're on day 29 or 39 today, then I suspect we're going to get a bottom in this daily cycle low here pretty quick, and we're going to start another rally. Now, I don't think the rally is going to get very far. I think it will left translate. Probably, my guess is it'll probably come up and test the upper part of this box. Maybe we get a kiss goodbye, so to speak, of this 200-day moving average. And then ultimately, I think the price is going to break down out of the box, not higher out of the box, because I think this is a 3-year cycle top. Price was stretched extremely far above the not only the 200-day moving average, but the 200-week moving average. Almost started to look like a parabolic bubble at that top. And so when that broke down, I think that was a sign that this was the top of the 3-year cycle. And so that would indicate to me that eventually price is going to break down out of this box. And this might be just a midpoint consolidation, and we get a move proportional to the downside as we head to the upside. So the move down into this box was just half of the move. So this was roughly a 15-point move from the top to the bottom of this box. If we get another 15-point move when we break down out of the bottom of this box, that would imply a move down to somewhere around 85 or 86 on the dollar index. So as I widen the chart here, that would probably break below this last 3-year cycle low, and that would indicate that the dollar is in a secular bear market. If the multi-year cycles, the 3-year cycles, are starting to left translate and fail, that would indicate a market that's in a secular bear market. So that's what I think is happening with the dollar. I think it's bouncing around in this box, and I think the price will eventually break to the downside out of the box, and our 3-year cycle low could drop below this previous 3-year cycle low and confirm that this was a kind of a bubble top in the dollar, and that the dollar now has entered a secular bear market. Now let me go to gold. So, like I said, the drop into the daily cycle low is what is powering this B wave bounce in the dollar, and we've had 3 tests of this intermediate trend line. One, as I've said this many times in the past, but one of the rules is that an ICL almost never ends until that trend line breaks. You have to break the trend line, takes out the technical traders. That washes out all those stops, clears sentiment, and then you develop the fuel for the next leg up. And so basically every time I ignore one of my rules, it eventually comes back to bite me in the ass. So I am just going to be very loath to try and call a bottom here until this trend line breaks. And then another parameter that almost always gets met is an ICL or any cycle low for that matter, will almost always retrace at least back to the 38% Fibonacci level. So let me put that in here. All right, so you can see the 38% retracement is at about 1908-ish, maybe 1900. I would have to see something really convincing for me to try and call this as a final bottom when these 2 main parameters of an ICL haven't been met yet. We haven't broken that trend line. We haven't retraced 38%. There's some volume indicators that I'm looking at on the mining indexes, some overbought, oversold indicators, sentiment. Just really none of the parameters have been triggered yet that would tell me that we've done enough to complete an intermediate cycle decline. And so from past experience, whenever I've tried to call one of these early without at least most of those parameters being met, it almost like 99% of the time it comes back to bite me in the ass. So I'm probably not gonna, I just don't think this is a final bottom yet. I think this is a B-wave bounce. It's getting people bullish, and that's what these B-wave bounces do. That it draws people in too early, and then when price does start back down, they get knocked out of their positions for a loss, and that adds to the selling that then creates that final move into the intermediate cycle low. So barring something that is really convincing and convinces me to try and call this as an intermediate cycle low without any of the normal parameters for an ICL having been met yet, I'm not willing to do that. It would take, I'm not exactly sure what it would take for me. I guess I would say I would have to see RSI come up here and get extremely overbought or embed in the overbought condition, and at that point I would give up on trying to or waiting for confirmation of the any or all of the parameters that generally signal an ICL. And right now we really haven't triggered any of the parameters I need to see to call an ICL. Not one of them has triggered yet, and probably until the majority of them trigger, I'm just not going to be willing to call this as a ICL bottom. I think this is a bottom of an A wave down. I think we're in a B wave bounce as the dollar drops into that daily cycle low, and then when the dollar starts its next rally, probably to test the upper part of that consolidation box, maybe the 200-day moving average, then I think that is going to give us our final drop into the intermediate cycle low. And I don't necessarily think that it has to go any deeper than this 38% retracement. And I think that this cycle will be rather short. The reason being is this daily cycle was really long. And this daily cycle was quite long. So I would expect this daily cycle to be very short. And all I'm really looking for is, like I said, is at least a test of that 38% Fibonacci retracement and closing some more of this gap between this high and this 200-day moving average. Gold just got a little bit irrational, got a little ahead of itself, stretched a little too far above this 200-day moving average. I think it's still too far above this moving average to really power a strong move and a breakout above that 2090-ish resistance zone here. So I think we got one more leg down. I think we got the C wave down. Close a little bit more of this gap here above the 200-day moving average. Get some more people bearish. Wipe out the bullish sentiment that's developing here on this B wave bounce. That'll build the fuel for a move to break out above this resistance and give us a sustained move that could potentially be the start of the bubble phase. I'm about 50-50 at this point as to whether or not a breakout above 2100 would ignite the bubble phase, and then we've got about a year and a half, 2 years before a final top, or whether this could draw out for another 5 or 6 years with the bubble coming later in the decade, maybe somewhere around 2028 or 29. Like I said, 50-50. I'm leaning, potentially that a breakout, because this has been such a long process, that the breakout could potentially start when we get a breakout, or the bubble could start when we get a breakout above this level. So I'm not going to rule that out, I'll put it that way, and I'll be willing to play it as if it is the beginning of a bubble phase when it happens. But I think it's going to happen in this next intermediate cycle. It's going to happen this year. I think we just need to complete the parameters of an intermediate cycle low, build the fuel, and then get that'll give us the breakout above that, and then I think we're off to the races. So you've still got time as long as this intermediate cycle decline is playing out. I don't think it's finished yet. You still got time to get on board the premium SMT newsletter. I'll put the link to the premium website in the description below.